Hello everyone, Tim Erickson here, back for another update video on my Robinhood investing challenge. For those who are new to the channel, we started investing on Robinhood with $10,000 a little over 2 months ago, I guess 10 weeks ago to be exact, because this is their 10-week update. And our goal is to turn it into $100,000 and see how long that takes. Hopefully we'll do it pretty quickly. As you'll see here, we're already up to 14,000, so we're up a little over 40% in those 10 weeks. This week in particular was a pretty uneventful week. As you'll see in the last week, we were down ever so slightly, $29.47. So overall, pretty break-even week. At one point was down a little bit more, recovered some, and then pulled back, again to just hovering over 14 grand. But just to update you on the trades that were made in the week really quickly, I want to come in here to my messages. There weren't a ton of trades, but as you'll see here, the first trade I did on May 24th, I did open 4 new Viacom puts. These ones expire in July, and I'll show you those over here. I did these at strike prices of $37.50 and $35. So for those who are new to the channel, that means I sold the $37.50 put with my July 16th expiration, and on the same expiration date, I bought the $35 put, which means I only need $250 collateral per contract, because that's the difference in the strike prices times 100 for 100 shares, right? So $250 per. I did 4 contracts. Those were just with the collateral that was released from my options that had expired the previous Friday. So I opened these puts. I received $52 each contract. As you'll see here, I have 4 contracts, so I received a total credit of $208 when I opened this position. Currently it says they're worth 180, so small gain right now, but again, the hope is that they become worthless on the expiration date, and or if they become pretty close to worthless long before the expiration date, we may look to close them ourselves just to release the collateral and move on and repurpose it somewhere else. But that was the main new put that I opened last week, receiving again $208 in cash. And then I also took that money and I bought 12 more shares of AGNC, as you'll see here. That brought me up to 100 shares total. And then I also bought 1 more share of Bristol Myers Squibb, which I believe brought me up to, I think, 28 shares, if I remember correctly. Yep, 28 shares of BMY, and now 100 shares of AGNC. So again, the AGNC that I purchased was mostly for the yield, as it is currently paying 12-cent dividend each month, so it comes up to $1.44 per year, which is somewhere probably just under 8% on its current price. But the hope and or expectation of a lot of people is that sometime in the next year they will raise their dividend, which will increase that income even further. But I bought 1 more share of BMY also, as it had pulled back a little from its high, and again I think it was a pretty good value for now. So those were the main that was the only option trade, and then the only stock purchases of the week. Well, not the only option trade. There's one more option trade that I'll get into in a second, but as you'll see here, if I click on my summary, I'm sitting on just $5.83 in cash, and currently have $7,500 deployed as collateral against my options. There isn't a ton of options expiring in the short term. I do have, $1,000 collateral expiring on Friday, but then there's nothing until 2 weeks from there, and then another 2 weeks, and then in July we really have a whole lot of contracts expiring. So June, we just have this 2K collateral expiring in June, which is not a ton, so it might be a slow couple of weeks in terms of updates as far as making new trades. It'll probably just be 1 or 2 trades a week is really all, as I'm waiting for time to expire and for these options to get close to worthless. I will obviously be looking to reposition the money as I get it, but especially as we get into July and these contracts come up, then I'll have a lot more collateral to reuse. But there is also the possibility that some of these positions could become close to worthless and be worth me wanting to close early. Like one that I have my eye on is this Facebook one. Doesn't expire till August 20th, which is a little less than 3 months away, but You'll see here, I received $104. It's already estimated it's down to 44. If that gets closer to the 20 range and I still have 2 months to go till it expires, I might go ahead and pay the $20 to close it, take that 500 collateral and go open something else. We'll see. But it's all about kind of maximizing the return I can get from the collateral I have deployed. So the last trade that I want to talk about for the week is one that I lost money on. It is my second realized loss of the trade, and this was one that I did on AMC. So I'm sure all of you have heard a lot about AMC in the news recently. I believe, and I do plan on doing another video that will talk a little bit more in depth about AMC and the short squeeze that a lot of people are hoping is going to happen and take place with regards to them. But you'll see here, I opened a call credit spread and received a credit of $11 when I opened that, and then later I turned around and paid $30 to close that. So I actually realized a loss of $19, right? The 30 minus the 11 that I received. So I did realize a $19 loss on that one. I did end up paying to close it, so my max loss would have been 100, but I only paid 30, and the way the strike price or the price of AMC currently is, I definitely would have incurred a max loss had I held it. So I'm glad I paid to close it, but that is one that I will talk a little bit in more detail in my next video about AMC. But essentially, I was betting it wasn't going to continue to run up, and it did. So I had to pay to close that one. And I do look forward to doing another video where I can discuss this with you guys in more depth, because as you can see here, over the last year, AMC stock price has really, really gone to the moon. It bottomed out down here around $2 and has shot up to 25, peaking at just over $30 earlier in the week. So looking forward to talking more about that one in my next video. But for now, just want to show you, if I come to my history tab, you'll see I do have one pending dividend again. This is now AGNC, which is now paying me $12 a month because I have 100 shares now, as opposed to the last dividend I received when I only had, I think, 78 or so. So happy to see more income coming from those. But then just looking at the overall stock positions, you'll see obviously Oracle and CVS continue to be my biggest winners, but everything is in the green and showing a profit on everything. So very happy with how we're doing so far, and excited to continue to grow. As you guys who have been following the challenge along the way know, when we first started with our $10,000, Robinhood only let us use about $5,000 and change in options collateral. So as our account's grown, our available margin has increased, which is why they're letting me use a little bit more collateral now than I could use previously. But very happy to see that increase, and as our balance continues to increase and that number gets bigger and bigger, we'll be able to do a lot more and more trades and more big and exciting trades, big money trades, that instead of talking about $100 credit or $200 credit on a trade, we might get up to the point where we're talking about making $500 or $1,000, so definitely excited to see that continue to increase, and can't wait to catch up with you guys next week. So until next time, again, this is Tim Erickson. If you're enjoying the videos, please consider leaving a like and subscribe to the channel so you can be notified when new videos go live. But leave a comment below, let me know how you guys are doing, if you've experimented with options trading yourself, or if you have any questions and whatnot, or any stocks in particular you want me to look at, please do so. But I look forward to catching up with you guys next time.